Hello everyone. Welcome to this latest edition of Search for Reels by INR Bonds. I'm Nikhil. In today's topic, we'll be discussing about should you buy 10-year Gsec or not at the current levels. In the last 1 month, if you have seen, the Gsec yields have been hovering between 7.10% to 7.25, but post RBI policy, the levels have reached above 7.25 to as much as 7.34 and 7.35. So basically, if you have been following us on YouTube, you must be aware on update on RBI. If not, if you're a new listener, I'll just take a quick time of yours to update on what happened with RBI policy. The RBI policy, as widely expected, left the rates unchanged. But however, they pressed on the sale of OMOs, which spooked the market and led to fall in prices of Gsec, which led to the rally in yields. So the current rally is almost a 6 month high where we have not seen such kind of levels in Gsec from post March. In March, we have seen due to tight liquidity conditions and the financial year closing and the post budget, we have seen the yields moving up as much as 7.45 to 7.5 levels. So from there, the yields the rally to 7.10 on good macro and good. We have seen good tax collection revenues and advanced tax collections also have been pretty good in the last month. And all these factors played in and led to a good rally in Gsec. And on top of it, on the cherry on the top, we got a good news from the JP Morgan inclusion of Gsec into their index. However, the flows will not be seen right now, but it will take close to another 6 to 7 months. So right now at current levels, one should look at Gsec to buy or they should wait to invest in the Gsec or not. Something we'll be discussing in this video. Before we go into the topic, I would like a quick note on the risk factors of investing into the bonds. That bonds carry credit risk, interest rate risk, and the liquidity risk. However, the G6 won't carry the credit risk because it's backed by Government of India. It only carries the interest rate risk. You should know about the risk before investing and consult a financial advisor before investing. And this video is not any kind of a recommendation, but just a kind of a perception on the current G-Sec moments. Yeah. So coming to the topic, we have currently, as I said, the RBI OMO announcement, which will the tool which they use the tool to manage the liquidity in the system. They withdrew that incremental CRR which was announced in the previous meeting, which almost sucked the excess liquidity in the market. So currently the liquidity in the market has been the deficit, but they said they'll be using this OMO to manage the liquidity. So which is why we are expecting the liquidity conditions to remain tight in the next few quarters as well. That's why the reaction is in the Gsec yields we have seen. And on the global factor as well, they played a role in Gsec yields where the the inflation, the global inflation is very sticky and it's not really coming off the way it should have, the way the interest rates have been risen in the Western countries. So we might see the Fed might go with another rate hike, and the U.S. economy, the latest numbers show it's very strong. There's a little bit of softening in the wage growth, but the job growth has been really tremendous and it's really strong. And top of it, the oil prices have already been trading at $90 per barrel. But with the new improvements over the weekend from the Israel war, the Hamas, where these the militants from Palestine have attacked Israel, and the Gaza belt is under the attack, which might disrupt further supply of oil. As any which ways, the supply has been very constrained. Artificial supply cuts were there, but however, the demand has been flat. To maintain such levels, the OPEC countries are cut down on supply, and this war can put another pressure on oil prices, and we might see some rise in oil prices going ahead, and which will have some impact on the yields again. So, given the U.S. Treasury yields at almost close to 5%, there is a good the foreign money going out from the emerging markets, and which is also one of the reason why the 10-year yields are slightly higher than the 750 and 720 levels. So going forward, the positive factors are the next year we would expect the government to raise around 12 lakh crores to 13 lakh crores through the Gsec market, and we expect the let's say that from the JP Morgan index, we would expect USD $20 billion flowing into Gsec, and the domestic appetite of buying Gsec, and the banks to maintain the regulatory norms, they'll buy Gsec. So overall, we would see some deficit, the supply of Gsec, where that's where the yields might rally further, and investors who are planning to lock the yields at maybe 740, 750 levels could see some capital gains going forward. There's a possibility, and top of it, and further, there are few more indexes like Bloomberg Global Index or the FTSE Russell Index, which are also working on the inclusion of Gsec into their index, which can add further more demand for G6. So given the supply constraints the next year, and the sudden demand for the G6 can really push the prices up and the rally in G6. If you're wondering how to buy government securities from the market, or from planning to buy the corporate bonds, the best place for you to is get onto the INR bonds portal and place your bid or offers. And you can also access the codes and the best codes and the transparency of the market information from the website. And we also have QuickInvest by INR bonds, our curated list of bonds listed on the mobile applications on both iOS and Android, where you can access the best bonds, best codes curated by us, and you can experience the simplest process of investing in corporate bonds, G-Secs, and the fresh debt IPOs as well.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
If you're not subscribed to our YouTube channel, please do so to get the timely updates. And investors should wait for some time if you're planning to invest in Gsec. Let the market cool off from all the uncertainties that are playing around. Maybe at 740 plus 750 levels, one can look at the Gsec to add into their watch list and see the play of capital gains, and maybe the next in the next financial year as well. Thank you for listening in. We'll come out with the next edition after 2 weeks. Thank you.
Attention financial advisors. Want to attract new business and customers? Offering a new asset class is the key. With debt mutual funds and MLDs losing their tax advantages, your clients need to diversify fast. Look no further than corporate bonds, the perfect solution for safety and good returns. Partner with INR Bonds for expert guidance and valuable resources to get started. Access a wide range of bonds on our portal and manage your client investments with ease. Visit partners.inrbonds.com today and unlock new business potential.